But yeah, always do your own research on stocks. Don't listen to what some random guy on YouTube saying. What's going on YouTube? Taylor Prentice back here with another video. In this video I'm going to be talking about 4 stocks that I've been buying right now that are really beaten up. Obviously the whole market's kind of in the tank right now. The NASDAQ and the S&P have both been really beaten up. But with that being said, let's just go ahead and hop right on into these stocks. So the first one, as you guys can see here, is Meta, or Facebook, whatever one you want to call it. It has been just demolished. It was one of the first big tech stocks to fall. They reported kind of weak numbers one quarter and gave bad guidance for the next quarter, which was actually this last quarter, which they reported okay. It seemed like they did pretty well for what they had expected. And I think it's just been overly beaten up. I think any price under 200 is a pretty good opportunity to pick up shares, and I will continue to keep grabbing shares as long as it's under 200. Right now it's my biggest position in my portfolio, so I've been adding other stuff that I think maybe has a little bit more potential since I already have such a big position built out in Meta. But in terms of their business model over the next 3 to 5 years, I see no scenario in which they're not higher in the future than they are today. Obviously, if you guys go back and look, they haven't been this low since like 2020, March of 2020, when that big drop happened. And before that, you got to go all the way back to like 2019 to be at these types of prices for Facebook, Meta. And yeah, they've just had so much growth since then, and they've acquired so many companies. They own Facebook, Instagram, WhatsApp, they own Oculus. They are kind of pretty much in every type of business. Obviously they have a lot of ad revenue and stuff like that, which has been kind of hindered by places like Apple just implementing restrictions against them, which I think they'll continue to navigate through those ad problems. And I do think ad spending has gone down because consumer spending has gone down, so companies don't want to advertise or spend a lot on advertising when they're not getting a return on their money. So I think as consumer spending gets back to normal, I think the ads will start to do better, and hopefully Facebook will figure out ways to kind of get that data that they're not able to get through restrictions that Apple has implemented or whatever. But that's only a part of why I'm so bullish on Meta. Obviously their business model is really solid. They have a bunch of cash on hand, which is amazing, and any company that they like come across that might fit their business model for the future, they can just kind of buy. We had this happen with Oculus here in like I think it was like 2014 maybe. That sounds like a long time ago, but I'm pretty sure that's when it was. But that's done really well for them. Obviously it hasn't really paid off money wise, but market share, they have the biggest market share in virtual reality products, and I think augmented reality they will do really well too in the coming years. And I think those are both markets that are just going to keep continuing to grow, and as the metaverse kind of plays out, it'll be interesting to see how Meta capitalizes off of that. It'll be interesting to see how they monetize that. They haven't really spoken about that, but if you go back and think about it, Facebook was the same way. It was just like about making something cool that people wanted to use and acquiring as many users as possible and thinking about monetizing it later on. Like when Facebook got ads, a lot of people, especially like my age type of people, stopped using it. I feel like they switched to other platforms like Twitter and Instagram, and then they just bought Instagram. So yeah, I think Meta is kind of always on the cutting edge of what's happening, and they can always acquire companies to help them stay on that cutting edge, and they've just got so much money to kind of play in these areas and build out what they really want. Obviously in the last conference call, if you guys listened, Mark Zuckerberg said he was going to be more cautious about how he spent money because it does look bad for shareholders kind of if they're spending a bunch of money and they haven't been making as much money as projected. But I think he knows what he's doing as far as spending, and I think he knows what it's going to take to build out his plans or ideas, and the team knows what it takes. So I think they'll continue to spend money how they see accordingly, even if it might not be best for the shareholders short term. And that's something I'm definitely okay with, because I think it's better to create something that'll be worth way more in the future than to kind of skimp out on spending money now and maybe not get as big of a market share once the metaverse and augmented and virtual reality become bigger parts of our lives. And then moving on to the next stock, we have Corsair. So Corsair is a gaming stock. If you guys are unaware, they own brands like Elgato and Scuf Gaming, which are pretty popular in the gaming community. I actually had like Elgato capture card when I was in like 7th or 8th grade because I wanted to be like a gamer. Should have stuck with it. Honestly, probably would have paid off if I would have like actually got into it. Funny to think about now. But anyways, Elgato is really a staple in the streaming community. They make lights and mics and just all kinds of gear for streaming and stuff like that. And then Scuff Gaming is really well known. It's a pro controller. They have collaborations with all the big gaming teams, and pretty much anyone you can think about that's popular in the gaming world, they've kind of collaborated with. So those are two brands that are just super well known and continuing to grow. And Corsair itself is continuing to grow. I feel like those three brand names are all stuff that people are pretty familiar with. Like, I'm not even like a PC gamer or whatever, but you definitely know about Corsair through their peripherals, whether it be like headsets or even like the mouse and keyboard. Yeah, their RGB stuff I feel like has kind of helped their branding, and Corsair's price has just gotten demolished over the last year, and it's really pretty much at an all-time low. So the all-time low is $13.04, but it just bounced back from that pretty much. They got slaughtered the other day because they gave some bad news before their next earnings. But as far as it goes for the next 3 to 5 years, I don't see how this brand could be any less successful than it is now, and I actually think it's going to be way more successful. I think if they could kind of replicate themselves off of a brand like Logitech and get more into the corporate world, that would be really big. If they could get like companies buying like their items in bulk, I think that would be amazing for them. Right now they're just kind of individual buyers, definitely consumers in gaming, but they do a lot with influencers and stuff like that to help build the brand. And I think gaming as a market is just going to keep growing. So I have a pretty high conviction in Corsair, and I think their price is just kind of silly right now. So anytime it's under like 15, 16, I'm pretty much a heavy buyer. Really, anytime it's under 20, I was looking to buy. My cost basis is like 22 and a half, I think, maybe a little under that. But yeah, really anything under 20 I think is a pretty good deal, but just under 16 and 15, it just got silly. I picked up some shares the day it got down to like $14.50. And then moving on, we've got Tattooed Chef, which is kind of popular here on YouTube, but it's another brand I have a really high conviction in. And their last quarter, they did crazy revenue. As you guys can see, 37.35 growth year over year, which is huge for a company like them, because right now it's all about growing revenues. They're not super focused on profits right yet. They're worried about getting their brand out there and just establishing a brand and getting into as many stores as they can, which they're doing, and they're getting a bunch of SKUs in these stores. If you went out there and looked a year ago, there would be like none of their products in the stores, but now they've got like almost full like refrigerators at certain locations. Like even where I live, it's a pretty big brand, which is funny because it's not the type of area where I would think that a brand like Tattooed Chef would do really well, but obviously it is doing pretty well. And yeah, this stock at like $7 I think is just a little silly on pricing. I have it at like $15 cost basis, and I still feel pretty comfortable with that over the coming years. I don't want to put a price target on it, but I could see it getting to like 60, 80 once they get into those years where they switch from building out the brand to just reaping in the profits. They've done a good job of acquiring different types of manufacturing plants that are able to create different types of products. So right now they really only sell frozen foods, which you got to think about the costs involved with frozen foods, because if you're transporting frozen foods, you have to keep it cold and frozen, and yeah, there's just a lot of costs that go into shipping and all that you don't really think about, versus them having like snack food or like snack bars, which is stuff that they're going to get into, and they're probably going to be like healthier options as far as those items go, so that should help them out too. But I think just having those items will help establish the brand a lot more, especially if they're able to get those items in like gas stations and stuff where people just can see the brand on display or whatever, because it does seem like stores that Tattooed Chef gets into, the sell-through is pretty well. As far as Tattooed Chef goes, I'm really hyped for it. It will just be interesting to see over these next couple quarters how things go, because they've just gotten so beat up. But it does look like they will hopefully get to profitability by like the end of 2023, so we will see how that goes. But anyways, that's enough with it. Moving on to the last stock, which is Farfetch. Farfetch is actually the stock that's the most beat up on this list, and it's one of the stocks that I'm most excited about. So if you don't know what Farfetch is, it's a like luxury retailer for clothing mainly. They do some like home decor, and they're getting into beauty supplies, which is a huge benefit in my opinion. I think that's going to be huge for the brand, and they're actually profitable for the first time this last quarter. Yeah, I think they're just going to continue to keep growing. I think the luxury space will continue to grow over time. I don't think it's something that's just going to go away. I think even if consumer spending is down, it'll still do pretty well, because the people buying these types of items aren't really the type of people who feel inflation that much or are that affected by money, or just think about like money when they're going to buy these types of products. They are like really in the upper echelon of shoppers. So yeah, it will be interesting to see their numbers this quarter. I think they report in like a week or two, so I'm gonna have my eyes peeled for that. But basing off of what Nordstrom reported, they did pretty well, so I would have to imagine they did similar, if not better, as far as retaining consumer spending. But their stock was at like $54, I remember last year, something like that, and I thought that was just kind of outrageous. I was like, dude, that is way too high. And now they've grown so much in I mean, it's only been a year, but I feel like they've had a lot of good growth. They've implemented a lot of things. I think beauty is going to be a huge thing for them. So Farfetch owns brands like Off-White and Palm Angels. If you're familiar with fashion, you know those are pretty well-known brands, and it'll be interesting to see if Farfetch is able to establish retail brands like that in the beauty space, because if they do, I think long term they're just in a very good position. And what I was getting to was they were at $54, which I did think was a little outrageous, but they've had all that growth since then, and now they're at $8. Like, just kind of crazy to think about. And I think this might be one of those stocks that once it starts going up, people will kind of FOMO buy into. So I could see this one going up pretty quick. I've been trying to add my position to this pretty aggressively, and I haven't built out my position as much as I would like. Farfetch is one of my smaller positions that I'm looking to add pretty aggressively, and it's one of the most beaten up stocks out of all of them. So I feel like if we do hit that recovery, it will do really well. And this actually, I'm hoping, is similar to like March 2020 when I bought Nordstrom, and then it ended up like tripling, which I should have sold some of it. I actually just kept holding on to it, but now they started paying a dividend and whatever, so it ended up working out. I'm probably just going to hold those for a long time because I'm still pretty bullish on Nordstrom. I just haven't been buying any because I do think Farfetch right now is a better deal, but that's just my opinion. Let me know what you guys think down below. Let me know what you guys are buying. But yeah, always do your own research on stocks. Don't listen to what some random guy on YouTube saying. Do your due diligence and have high convictions when you're investing your money in something, regardless of what it is. Even if it's stocks, crypto, a business, just make sure you know what you're doing and don't listen to some random guy on YouTube. But if you made it this far in this video, thank you so much for watching. We will see you next time. Have a good one.